Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone had a good weekend, a little time away from the screens, except for, of course, last night's show. I hope everyone had some time to think about what it is their plan is for this week. It is end of quarter, one of the trickiest weeks, 4 of the trickiest weeks every year are as money managers and traders and portfolio managers, you name it, anyone allocating and deploying cash or redeploying, right, has to make some significant decisions. While there are obviously 4 quarters to consider, I find the second quarter and the fourth quarter to be some of the most volatile because the second quarter sets up the second half of the year. Well, obviously the fourth quarter is impacted by window dressing and whatnot. So this is definitely, when I think about weeks that I want to be careful, weeks that I want to be cautious, weeks that I just might want to let the market do its thing, and then we'll wait for the dust to settle and figure out what type of trades are open to us or shorten the time frame so we can be more nimble about it. This is that kind of week. Day trading is great. Monday through Thursday, short-term swings are going to be great. And if you're thinking about longer-term plays, daily, if not even weekly, with a little bit higher appetite or at least higher tolerance for volatility, well then yes, end of quarter could be interesting. In this week's issue of our newsletter, which you can find at thisweekinthemarkets.com, I get into what the candidates are for rotation. While we can't always know which sectors are going to rotate or that even rotation is going to happen at all, we can narrow the field down to those symbols that are most likely to be if we see profit taking, if we see bargain hunting, which is really that rotation we're talking about. There are some symbols that show signs of being in one of those two camps. We can start to narrow the field down for what we're looking at. And then once we understand which sectors are moving, at that point, we can get a much clearer idea of the impact on the indices. So that's very much, I think that's the first topic we dive into in the newsletter this week, which should be posted later on this morning, if not already posted. All right. Okay. So with that being said, good morning. Good morning. Great to see everyone. And let's go ahead and get started with the questions. Yeah. All right, let's get to it. Good morning. Good morning. Yes. Good morning, Mitchell. Hola, buen día. Yes. Good morning, Mark. Good morning, Richard. Great to see everyone. All right. First question. Jim asks, CVX. All right. Let's pull up Chevron. And then we'll step back from Chevron too, Jim, and talk about the implications of sector rotation. Cool symbol to kick off the morning with. All right, CVX is number 2 within XLE. We'll get to that in a moment. But CVX in its own right, it's in a downtrend on the 60-minute time frame. It's in a neutral environment, nearing previous support levels on the daily. Now, everything I'm looking at is automated, right? So I've got a Darvis level back in here, which actually doubles up right in, right next to it here. Got another Darvis level right in there. So if you take a look at what it is that we're dealing with from a price perspective, we've got 3 different Darvis levels to watch, right? 1 yellow and 2 purple. The colors really don't matter. It's just an easy way to differentiate one line from another, one box from another. And there we go. There's a zone of support as identified by the Darvis, and 3 Darvis actually. And then we have a neutral environment, and then we have a slow stochastic that's slowly getting oversold. And at this point, if we're going to see price action supported, I'd like to see a volume ledge. That's something we can do on TradingView. That's something we do very commonly in the Sector Secrets Mastery, which is, hey, where are the price levels, where are the volatility levels, and can we overlay them? Can we stack them with what's happening with volume? So that's what we would look at that. But Jim, you want to take one other look because CVX is part of the XLE, and XLE has been one of the lagging sectors within this quarter. If I look at a quarter to date sector outlook, then I'll see that XLE is actually poised for something similar to CVX, neutral environment, Darvis support, oversold stochastic. And if we're going to see rotation out of tech and into things like energy, XLE, CVX would definitely benefit, as would Exxon, right? So not only is it interesting in terms of where it sits right now, it's interesting in terms of the possibility for sector rotation and how the top two weighted stocks within the XLE could also benefit. So keeping that in mind, Chevron is rather an interesting symbol. All right, moving on to ATVI. Hey there, Robert. All right, looking at ATVI, not an uptrend, oversold. I'll tell you what, if I'm going to wander into tech, Robert, even though I'd rather be long, and as long as we're above the 200 propulsion, the white dots on the screen, I'd prefer to be long because we're in the bullish hemisphere, the 200 being the equator, if you will. So neutral environment, I got to say, there's so many stocks in tech, and you're mentioning the 1 hour, but even then, there's so many stocks in tech that are in uptrends. I'd probably start with one of those, but with the 1 hour specifically, tell you what, a couple things to like about a buy. But really, we're in the middle of two zones. So what I'd say is that 200 around 81 is very interesting. We're coming off oversold, heading down to about the middle of the slow stochastic. And this is a 21K 3D slow stow. Ultimately, what I'd like to do is focus on the long side, but frankly, it's going to be whether we hit gold or gray. The upper level gold is resistance, the lower level gray is support. But I'll tell you, the trend that preceded the neutral environment that we're in twice was green, was up. So I have a slightly bullish to neutral look at this, also bullish to neutral because of the 200. So I'd wait for price to move down into volatility-based support, Robert, and I would prefer the buy, yes, on the 1 hour. All right, next up, Richard asks, do I ever buy stocks or only options for day trade? Options mostly. Richard, I don't mind to buy stocks. I don't, because I think the cost is pretty prohibitive for a lot of folks to buy enough shares to be a needle mover, right? Let's say we were trading Activision. Back in the day, many of you will remember it was nothing to be able to get 4-to-1 or 10-to-1 leverage, depending on whether you're trading through an entity or whatnot. It was not unusual to get leverage in day trading stocks. I'm going back to the late 90s, early 2000s. So a lot of day traders, including myself back then, would trade anywhere from, say, 500 to 2,000 shares of these different tech stocks. We had leverage. It was beneficial. Now, the way to get that leverage, also to lower the cost, is to go with options. But I will say this, Richard, my philosophy is if I'm going to buy the derivative of something, an option is a depreciating derivative of a stock, right? If you think about what an option is, that's what it is, a depreciating derivative. If I don't want to buy the stock, I've got no business buying a call. So anytime I'm buying a call, the timing would be nearly identical for buying the underlying. So do I buy in the money calls and puts? I don't like to be in the money, but I like to be at or maybe slight, right? That's usually where I'll be. All right. Green Eggs and Ham asks about AMD. All right. AMD was in an uptrend on the daily, now neutral. But, I'll tell you again, whenever I'm looking at an individual stock, I think the part of trading that's the most difficult is not scanning. I'm not a fan of scanners. I'm not a fan of scanning. I'm a fan of relative performance. You might say, Rog, what's the difference? Oh, huge difference, because relative performance says, one, stocks have to be relative to each other. Well, relative in what way? Some sort of technical criteria? That's completely random, right? Whether two stocks in two different indices or two different sectors are responding in a similar way to the RSI or whatever is really irrelevant and disconnected and really coincidence for the most part. However, if Microsoft and Apple are moving together, if Microsoft, Apple, XLK, and the NASDAQ are moving together, that's all relative. There's a connective thread there that goes beyond technical criteria and actual weighting, right? So I bring that up because anytime I'm looking at an individual stock, all that homework will have been done. So when I take a look at AMD and I take a look at the fact that it's losing its trend, of all the stocks in the SMH, again, it would be remiss for me not to at least mention part of trading, and the most overlooked part of trading, gang, is traders end up finding a symbol that they like, but don't question necessarily. And I'm not saying that's the case here at all, but a lot of traders don't ever question, well, why am I even interested in that stock? So let's bring up AMD. Green eggs and ham, Nvidia, Taiwan Semi, Intel, LRCX, AMAT would be more bullish than AMD. Qualcomm would be more bullish than AMD. So AMD is in a small group of Micron, Texas Instrument, ASML, right? So I'd rather focus on an uptrending name. So I just want to at least put that out there. But as far as AMD goes, I just assume at this point, because we have a neutral environment, it's no longer a buy the dip. It's no longer about retracements. It's about an oversold stochastic that would be overlapping with the Darvis, that would be overlapping with the DPMR, maybe a moving average, and then getting long once the slow stochastic moves to an oversold level. All right, moving on to thoughts on getting set up and into the game. New trader here, want to learn and make the all-important watch list. Oh gosh, Dark Rival, thank you for the question. Thank you for the honesty. Watch list is the last place you're going to start if you're just getting set up. And I don't know where you are in terms of new to the game, but just the fact that you're in that mindset, I think you're in the 10% rare air of traders. You realize I've got a lot to learn, and where do I need to start? I'd start with figuring out what kind of indicators and what kind of time frame you want to trade. So and really strategy dictates the indicators you're going to use, and then figure out what time frame you want to focus on. Do you want to be a day trader? Do you want to be a short-term swing trader? Maybe a longer-term swing trader? For me, that's the difference between the 1 hour, and the daily time frame. So I would pick that first, then move on to the strategy, which will naturally give you the indicators that will be best for it. And then, right, once you know the criteria for the kind of trade you're looking for, the watch list would be that last step. I mean, I would go through that. Process. Yeah, I would definitely go through that process. And that's exactly what we do in the Sector Secrets room. But, look, I've got the show that I do every day here, Charts and Coffee. We've got the Sunday show. Just take in all of that, the free videos. And then if you say, Rog, I think you're the mentor for me, you know where to find me. All right, next up, D-Dog. All right, I'm currently long puts, July 7. All right, so again, not knowing the setup or the trigger or the time horizon of the trade, I'm just going to go ahead and say that on D-Dog, I'm not allowed to get short on the daily. If you are looking at, for example, the 1 hour, there are a few windows where, sure, I am looking at the right thing, right? Long puts. Okay. So there are some ideas for the downside in D-Dog, off resistance with the Darvis below the 200 on the 1 hour with nearly overbought stochastic. So ultimately, it depends on the time frame, Matt, as far as which setup. So I'd have to go with the 60-minute because I don't have a short or a long put. Same difference, right? Valid here. So perhaps from wherever you're from wherever you own the long puts, let's see if we can't get back down to the Darvis around 91, 90, 80. That's the way I would look at it. So if you're looking at the hourly, no apologies. I just want to make sure that, when I throw the ideas out there, I'm within some framework of what you've got going on. Hourly short swing into a near target. Yeah, I would still say let's look at that Darvis level. Let's look to see if we can get an oversold stochastic. However, the momentum has gone bearish. So if the momentum continues to be bearish, and if the trend then takes its cue from the momentum and organizes into a downtrend, then Matt, you can kind of push, the gas pedal here and try to milk as much as you can out of the short position. If it remains a neutral trend, which is where I'm using the multi-trend, those 2 rows of colors along the very bottom of my chart, if those stay neutral, oversold stochastic. But if they go red like they did in this in this little chasm here between Wednesday, Thursday, yeah, try to take advantage of it for sure. All right. Thanks, Matt. I appreciate that. You read my mind. Yeah, you read my mind. Okay, Frank asks, I only look at the 5-minute for day trades, not the 1-minute. Correct, Frank. I set up day trades using a 5-minute chart. So it's the 5-minute structure. It's 5-minute support and resistance. It's 5-minute reads on a slow stochastic or my V score. Now, I will say there is a pattern that I look for. And if I want to do it a little bit more aggressively, I'll switch to a 2-minute. The 2-minute is the shortest term time frame that I use and have been using for some time. But gang, I will tell you this. Is it the time frame that's ultimately going to be the reason that we succeed as a day trader? Frank, I'll be straight up. It's not the time frame. It's really which time frame slows things down, because that's always what I'm trying to do. Remember, gang, think about what most traders do. Most traders are trying to speed the process up. Most traders are also not profitable. So I'm going to think about all the things that I watch and hear traders do faster, cheaper, quicker. And I'm going to say, you know what? I don't care what my commission is, as long as it's reasonable and within industry standards. I don't want to speed things up. I don't want to be getting it with market orders. I don't need hotkeys. Some folks do, and that's okay too. But I'm going to say, how can I slow things down? And one of the easiest ways to slow things down is just use a longer term time frame. Let each candle take longer to develop. The patterns are bigger. The support and resistance is usually more spread apart. And so that's what I'll personally do. Ultimately, it's really whatever communicates to you the most, right? So I never want to say, if you're not using a 5-minute, you can never be a profitable day trader. If you're not using this indicator or that indicator, that's just arrogant and wrong. I'm just going to share with you what I do. That's it. So I like a 5-minute. The shortest I go to is a 2, and that's only for a very specific pattern that I like to look for. And that's really it. So I think ultimately day trading is just an exit strategy, right? People think day trading is an entry strategy. It's not. Day trading just says that I want to be flat by the end of the session. That's it. And then whether you want to be a scalper as a day trader, a trend follower as a day trader, a momentum trader as a day trader, maybe you're trading the morning, whatever it is, the strategies are endless really when it comes to day trading. However, we all agree, every last one of us, that at the end of the day, we're going to get flat. That's what day trading really is, as far as I'm concerned. So whatever time frame you use within the context of that is your call. Now, on the 5-minute, you'll see I use things like the 200 propulsion. I use an anchored VWAP. I use my historical price movement ranges. So I've got a price-based tool by way of my propulsion and my automated support and resistance with the Darvis, which, by the way, you can download both of those for free from TradingView. And I have a layout that I give simpler members in the options room, futures room, and of course, my Sector Secrets Mastery. I have a layout with a lot of my free tools available on it. And I'm going to wait for all these things to converge, as many of them as I can. If I can get the convergence of time, price, volume, and volatility, Yahtzee, those are the 4 factors of the market that I look at most for day trading. Okay, next on, Russell has retraced 50% of its last rally. I'm looking for calls. Josh, this is going to be very interesting. And I don't know which time frame you're looking at again, but let's see. Let's pull it up on the daily. So if I go from Darvis to Darvis, that's the way I like to pull up my that's the last major move for me. So I go from here to here. That's the last major move from Darvis high to Darvis low. So we're right around that 50%. I think we're on the same page here, my friend. Yeah, great observation. Okay. So here's my concern with the Russell. And I mentioned this in the newsletter this week. The Russell still has within it weighted heaviest the KRE, the regional banks. Regional banks have yet to get any real footing. So if you want to play Russell, I would be very cautious. It's going to have to benefit from end of quarter sector rotation. We're going to have to see flow into KRE. I think there's far more likely to be flow into big banks than regional banks, because one thing, and it's going to start to become a conversation, especially if Powell hikes in July, which is probable. Again, we have a commercial real estate, I won't call it a crisis yet, but when you look at the numbers, it sure looks like one in the making. There's so much debt that needs to be refinanced as we go into low occupancy rates and higher interest rates. You talk about a perfect storm that the market's motoring into. That makes me very nervous for Russell because of its disproportionate weighting with KRE. So we might get a near-term bounce, to your point. I would probably look for a minor low in that area or shorten the time frame. Yeah, Josh. So I like the Russell. There's a lot of folks in the Sector Secrets Mastery that love the Russell, but shorten the time frame and keep in mind if that CRE, commercial real estate debt refinancing narrative, starts to rear its ugly head, and it is going to be Medusa ugly. I mean, keep in mind that where the impact is going to be felt the greatest will be the Russell. And when KRE sells off, it will drag XLF with it. And XLF is going to disproportionately drag first the Dow, then the S&P. So there are headwinds ahead. And I think right now, that's what I'm most concerned about. Let's get the last rate hike out of the way. I'm not as concerned about recession. I'm not concerned about Powell. I'm concerned about the wild card of the CRE debt. All right, gang. Have a great one. I'll see you tomorrow. Same time, same station. Be good to each other.